Hey everyone, welcome to my channel. Today you're going to understand by the end of this video why I triple leveraged into small cap stocks, into an ETF that triple leverages small cap stocks because they have taken off like rockets and they appear to be going to the moon. And SUPERBULL Tom Lee, who's been super accurate this year, explains why the small cap mania is going to continue.
Now, I got to ask about your small cap call. I think you said a few months ago that small caps could rise 50%. We saw at the end of last week some interesting rotation into small caps. How much further in 24 can they run?
I think the rally that started last week for small caps is going to be larger than the October to December rally of last year. That was over 8 weeks, almost a 30% gain for the Russell 2000. This time we have a larger short position by institutions. We have small caps even more oversold, and valuations, whether you look at median PE, which is now at 10 times 2025 earnings, even lower. So we think that this move could be something like 10 weeks and as much as 40%. So I think it is just starting. And a lot of it has to do with the fact that, the June CPI was so astonishingly soft. I think it's giving the green light for small caps to rally finally, because the Fed will, ultimately cut, hopefully by September.
And how much do you expect the S&P to potentially rise over that same 10 weeks?
That's a good question. I think July, our base case remains that July should be good for the S&P 500. So, something like 57, maybe even close to 5,800 in July. But I think that August is really going to be one where the rotation becomes more evident. And I think it's going to be a stronger small cap and maybe flat to slightly down for the S&P.
Okay, and so that's what I was getting at is how strong can the small cap, say the Russell 2000 as a proxy, be versus the S&P 500? And you're saying after July, you actually think that there's going to be a significant outperformance of small caps versus that index?
Yes, and that's kind of what happened in that October to December rally. That, as you know, the large caps actually really sputtered in late December and early January because of that rotation into small caps. And I think, again, because the positioning is even more short relative to large caps, that it could be an even more sizable move.
So Tom Lee has been predicting that small caps, the Russell 2000, would go up about 50% in 2024, and they've already gone up about 10%. So what I've done is, he says there's still 40% left to go on it, okay? So I triple leveraged into the Russell 2000 by using the ETF, the triple leverage ETF in the Russell 2000, URTY, URTY. The normal Russell 2000 fund that isn't leveraged is IWM. I did this thinking that if I have a triple leveraged fund and it goes up 40%, according to his prediction, that's 120%. I'm hoping to at least double within the next 3 or 4 months. And you can see from this chart that the triple leveraged bullish fund URTY, URTY, on the Russell 2000 has gone up more than 37%. 34% is the 50-day moving average. And the unleveraged ordinary Russell 2000 ETF has gone up over 11%. Its relative strength is 67, which is good because it still isn't overbought. I expect that it eventually will be overbought if it keeps going at this torrid pace, and there's signs that it might continue to do so, and I'm hoping that it does continue to do so, frankly. It's also been a positive factor that retail sales on Tuesday came out much more positive than what was expected. They were expected to decline overall, and they came in flat, with some categories showing increases, such as if you exclude automobiles, it actually went up 0.4%, the retail sales. And they revised the previous month's retail sales higher, which was also encouraging. Another thing that has to help is that on Tuesday, the 10-year bond was at 4.17%. Your longer-term interest rates are coming down, which has to help with buying houses and cars. Also on Tuesday, the Atlanta Fed's first estimate of the second quarter's gross domestic product, the GDP, was 2.5% when only 2% was expected. So we're not currently going into recession yet. One of the main reasons the small stocks are going up is because it's rotating out of the Magnificent Seven into these smaller stocks, which have done so bad, done so poorly for so long. Now we're going to see the artificial intelligence stocks earnings come out. And if they come out super wonderful, this could take away some of the oomph from the investing into the small stocks. I expect the artificial intelligence stocks to have very good earnings, but whether they will be super fantastic, wonderful is another thing. But in any case, I think the small stocks have done so poorly for so long that they should benefit in any case. And so I think we can ride this for at least a month or two, and hopefully 3 or 4 months. On Wednesday, we get our first clue of a peer artificial intelligence company reporting earnings, and that's ASML. That's the Dutch company that does the lithography that transfers these complex artificial intelligence electronics onto the semiconductor chips. And it's about the only company that I know of that does this. So competition's not a problem. That's the way I roll. Thanks for listening.
Like you, be strong to hold the powers of the sun.